Before you do that, I will just put it on to record. So welcome, Jeremy. It's really nice to have you here. Thank you for taking the time out to come and chat with us. We really appreciate it. And
absolute pleasure.
Listening to what you've got to say.
Absolute pleasure. So let me know, first of all, that you can see the screen.
Yes.
Yeah. Is that okay?
Yeah.
All right. Lovely. Okay. So, yes. Well, good morning, everybody. And thanks for the opportunity to tell you a little bit about what I do and who I do it for, but more importantly, why we do what we do, because I think that's really the interesting part. So this is my background. I'm an ex-bank manager. I worked for Lloyds Bank for 27 years, so retail branch banking as it was in the good old days before I moved into business banking. And after 27 years there, I left there and then worked for Santander in corporate banking, so slightly bigger businesses. I then went and worked for a company called Business Enterprise Fund, which I'll come back to, very, very similar to the company I work for now. And we're what's called a social impact lender. So we were lending money to businesses that banks declined. So following that, I then went and ran an angel investment group, which if you've watched Dragon's Den, it's a bit like being the host of that. So every month I was running 2 angel pitches in Leeds and York, where people were coming and looking for equity finance. So that's selling a part of your business for a capital in receipt of funds, basically. And I ran that for a year. Subsequently, because of my sort of background in a lot of different lending areas, I got asked to deliver a number of workshops, hence this really. And I worked for the LEP and the Chambers and West Yorkshire Combined Authority, doing programs like investment readiness and help to grow. And this was really about trying to break down the barriers of what funding is available, explaining what the funding landscape is about, and showing people how to navigate that path. And I'm sort of quite pleased to be a bit in demand for that, because it demonstrates that your experience, it has brought you to a breadth of things, not just one. So brings me to the final point. I work for a company called Finance for Enterprise, and I'll come on to what they do. So there's me talking to people in NatWest, whether they're young entrepreneurs or talking to people doing the investment readiness workshop across Leeds and York. And it's really this ability to help people at all stages, across all sectors, across all parts of business. That hopefully is why I sometimes get asked to say, could you help explain to these people, or could you do a talk on this, that, and the other? So that's kind of what my background is. So the company I work for is called Finance for Enterprise, and we're called a CDFI. Now, nobody's ever heard of that, so don't worry, you're not the first. But if you Google it, it's a community development financial institution. And what they are really is like a conduit to take government funding, i.e. central funding, they want to get out to the businesses, but they don't know how to lend. So they give it to an organization like us, because we know the issues on the ground, we know our sectors, we know the problems, we know the challenges, we know the geography, and we know all the things why things don't work. So basically, we get given, let's say, 10 million a year by the government, who says, there you go, can you go and get that out to the good deserving businesses? They get declined by mainstream banks, they get declined by mainstream lenders. But nevertheless, these are the people who are growing the economy. They're creating jobs, they're buying materials from other businesses, they're paying tax, they're contributing to Britain's economy. They just need some help and support. So that's really what we do. So we were formed 35 years ago as a non-profit organization, call it a social enterprise, because we're lending money responsibly to people who otherwise can't access it, to do good things for the economy. It seems fairly common sense, doesn't it? But nobody knows that CDFIs exist or has ever heard of them before. So in effect, we provide business loans to businesses that get declined by banks. That doesn't mean they're basket cases, and there's lots of reasons why they get declined, but there are a lot of people who cannot access mainstream finance, and if they could, they would be able to do X, Y, or Z. And what we do is we provide the capital to enable them to do that. So very, very simply, we provide term loans. So from £25,000 to £250,000 to a startup, to an existing business, to a well-established business, across all sectors, across all geographies, across all ages. By definition, we don't discriminate where the banks might have done. and we're lending that money, making manual lending decisions from grey-haired ex-bankers like me, who look at businesses and go, we can see why the bank declined you, but do you know what? There's a good business here and you're good people. And if you get this capital, you're clearly going to grow your business. And the impact of that is that you'll create some more jobs and you'll pay more tax to society. So actually, you're deserving of that support. And that's really what we do. I must say, all of our loans are unsecured. So if you think the number one reason why people get declined by a bank is because they lack security for the loan. So that's why we provide unsecured loans. So we can help any business really with any purpose. And as I said, across all sectors, we don't discriminate, because by the definition of credit policies discriminating, that's why people get declined by banks. And that's why we're here to fund those gaps. We try to look at businesses that can justify the borrowing through affordability. So if it's a new startup, we've got to see that it's likely that they can afford this payment. Otherwise, we're just helping people get into debt that they can't afford. And that's not right. That's not responsible. So we need to try to establish some credibility that that business can afford the loan that it is they're requesting. And for that reason, we'll agree it over a term that's appropriate. But affordability is really the key thing here that we're assessing it on. We lend to businesses that don't have security. We have lend to businesses that have maybe not got their first year's financials, haven't got 2 years accounts, all those sorts of things that get declined by other reasons. But all the time, we're looking to help those good businesses to grow. Now, there's some terms thrown in here that you may or may not be familiar with. If anybody has heard of the Startup Loan Scheme, it's a brilliant scheme. It's a government scheme that lends money to startups at 6% and no arrangement fee. It's the cheapest business loan you will ever get. They're so good, you can only ever have one in your lifetime. That's how good they are. Well, we're what's called a delivery partner of those. So basically, we do about 200 of those a year, and we do all the decisioning for the government. So we're paid by the government. The customer pays us nothing. And as I said, they're a really, really cheap loan. They're up to £25,000 per owner, so they are somewhat limited, but they're a great first stage of borrowing for young businesses, up to 3 years old, would you believe? So we do get some businesses who are sort of 2 years down the line, don't consider themselves startup, but they're actually eligible for that. So we're an accredited delivery partner of startup loans. If you've heard of Northern Powerhouse Investment Fund, this is a £550 million fund. I mean, this is huge. They've just put another 660 million into it. And whilst this is to improve the road and the transport links and infrastructure and lots of things, there's a big slug of money there that's available to lend to businesses in the north. And that's basically Sheffield up to Berwick, Blackpool across to Hull. So I lend Northern Powerhouse Investment Fund money, which is one of our pots of money, to businesses anywhere in the north of England. And that fund is specifically aimed at the gaps created where banks say no. So the British Business Bank come to us and say, you know, we love you. Here's a big slug of that money, go and do it. And another scheme you may have heard of is called the Recovery Loan Scheme, which is really the last of the COVID schemes, which is really the government guaranteeing the lender in the event of default so that we can lend unsecured loans to businesses. And that's how we're able to do it. So, you know, again, all this is quite simple. We're lending government money, unsecured, to businesses that either can't or have been declined by mainstream banks. And we have the capital, we have the desire to lend, and we've got the ability to assess each case on its own merits manually. So, you know, terms very simple, what you would expect. You know, we charge a small arrangement fee. We do loans up to 5-7 years, blah, blah, blah. These are unsecured loans, so they're unsecured rates. So, you know, you're not going to buy a house with it and you're not going to be borrowing it for 25 years, but it does plug a gap to enable you to get something done to achieve. We don't take securities from them. And some technical questions there around personal guarantees, but we basically take unsupported personal guarantees, which all that is about is tying directors into the lending so that they don't just walk away from us and burn the business. And what we do is we take a 25% guarantee from the owners. And again, we don't take any security from that. So we don't take a charge over your house. We don't put 2 of your children in the safe or anything like that. We just want to lend to good people, good businesses backed by good people. And our funding are schemes like Big Society Capital, which I don't know if you've heard of, Good Finance, British Business Bank, Northern Powers Investment Fund. I mean, would you believe there is a fund that takes all the redundant monies in banks, so what we call dormant bank accounts. Banks have to hold those for around about 5 years. And then Good Finance swept them all up under the FCA. And that fund is a fund that we lend out on. Now, don't worry, because if you find a passbook upstairs in your loft in 10 years' time, you can still go back to your bank and they're legally obliged to pay you out. So it's not a problem. But there's millions and millions of unclaimed funds every year. And that is one of our funds that we lend out for good causes. So I've said before that we're a social impact lender. So in summary, we don't produce a set of accounts. So we're lending, 10 to 15 million pounds a year. We're getting capital and interest back, but we don't make any profit. Okay, so what do we do? So this is our year in numbers for 2021. So you can see in that year, we lent 15 million pounds. So that's loads of, average £110,000 unsecured loan to a business. Okay, that's our typical ticket value. The 15 million we lent, though, the businesses that took that money produced 80.41 of benefit to Britain's economy. I'll say that again. We lent 15 million and the businesses we lent that to contributed 80.41 back to the regional economy. So that's the impact of lending responsibly. As a result of that, those businesses also created 977 jobs or safeguarded and also created 299. Now, those numbers were slightly distorted because of COVID, but basically funding growing businesses produces and protects jobs. And that's the social impact of what we do. So in a nutshell, I can say what we do is we lend 15 million a year because those businesses will produce 4 to 5 times that, and they will create jobs. And what do the people with jobs do? They pay tax and they go and buy holidays and cars and carpets and furniture. So it really oils the wheels of the economy. And it really is common sense if you think about it. And that's why we're funded to do what we do. So we produce something called a social impact report every year, and we produce that rather than a set of accounts. And that says exactly what I've just said. So we're managing, 30 million pounds of debt, which we hope customers repay us every day and every month. But when they do repay us, rather than having any directors that take that drawing or spending it on flash cars, we put that money back into the fund so we can lend again. So our money gets recycled, as it's called. And as I say, we have a number of these funds over the years that we're asked to manage. Case studies, we try and get case studies in the news so that people can see that when the bank says no, there is an alternative. If they have no security, there is an alternative that they can see. Good businesses. So I have a couple of examples here. This was a bespoke stair manufacturer who puts stair lifts into your house retrofit, and that's a growing trend as with an aging population of people wanting to stay at home. They needed the funds to grow. Their bank had just closed over COVID. They weren't going to see them. They wouldn't help them, didn't want to help them. Great account, great customers, just said, we're just not interested in helping. And if you haven't got any security, we're definitely not. So we lent them £150,000 to grow their business and grow their turnover. This is a cake manufacturer out in Hull who makes all the Christmas cakes in February that go into the hampers, the Christmas hampers and things like that. Again, massive business, multi-faceted in the products and tray bakes that they make, etc. But again, lacking capital, the bank would only lend so much. Again, they found us, we lent them £150,000. What do we need? Okay, so a business comes to us and says, okay, this is all great, what do you need? It's common sense, really. So we need to know up-to-date financial accounts. So can you show us what you've done? How are you doing? How are you performing? Is that relatively up-to-date? If not, can we have management accounts? Then we look at the individuals behind that. So the individual, what's their personal financial position? Have they got 3 Porsches in the drive, or are they living within their means? What's their personal credit report tell us? What does it tell us about their behaviours? And all the things that we used to do as a bank manager, which would be to assess people and their behaviours as the best indication for going forward about whether they'll do the same again in the future. So we look at things like bank statements, business bank statements, and then we do a bit on forecasting as well. So a good application is really something simple where I walk a customer through, hand in hand, face to face, go and see them, do this sort of thing on a Zoom. And while I'm looking at the management team, do they know what they're doing? Are they great in their sector? Have they been doing this for years? Are they qualified? Do they have a good background? You know, I really get under the bonnet of understanding that business and how it's run. What's the backstory? Because there's normally a reason why somebody comes to us, and finding that out quicker is easier and simpler, because I'm going to find out anyway. You may as well tell me all the warts and all up front, but we listen to it. The problem with a lot of lenders is they're algorithmic driven. So you type that information in. Have you got a CCJ? Yes. Have you been divorced? Yes. Answer, no. You know, we're not like that. We're humans. We just listen to the story. We think about it with balance. We ask a few more questions and we go, yeah, that's fair enough. You know, we've all been through tough times. We can understand the story and understand the business. And then have we got some supporting information that seems credible and reliable and from a good source and seems to back up everything that you've said? And if that's the case, then that's a pretty common sense way to make good lending decisions. We try and put these case studies out in the news because we think that businesses might see that and engage with that and go, oh, I'm like that cake manufacturer, or I'm like that business unit in Grimsby trying to grow his team of staff. You know, would you lend to me? And we just try and use those examples of individuals and their businesses to engage with people who haven't otherwise heard of us and hopefully pick up the phone and say, you know, would you help me too? So we really are different, okay? We've got a different risk profile, very common sense approach to lending, old fashioned almost. We don't use algorithms. We don't have set credit policies. You know, we try and break down barriers and try and make it easier just to talk to and assess. We make fairly quick lending decisions because there's no security. Once you've made a decision, we lend the money normally in about 48 hours and straight in your account. Introducers, so banks, accountants, public sector, LEPs, people like that, they're people that generally get what we do, and hopefully they then refer to us, clients who need our services, and that way we get a win-win and we keep businesses in business for longer, really. And that pretty much hopefully tells you a little bit about what a CDFI is, why they exist, and what the impact is of what we do. And that's really why there is an alternative source of finance available to businesses when they might otherwise think there's nothing out there. And hopefully that's just giving you a small insight into my world.
No, it was really interesting. I always, yeah, absolutely. I always wondered what happened to that excess money that remained in the banks.
There used to be a Not the 9 o'clock news sketch, if you're old enough to remember that, where a fellow went into a bank and they said, oh, we had a raid last night. And he says, what? They said, yeah, what we do is we put all your money in little shoe boxes and we keep them out the back under a mattress. And last night we had a burglary and your box got stolen. And this customer's getting really upset. And he goes, only joking. And he produces a cardboard box and he takes the lid off and, as if that's the way it's done. So yeah, myths and legend. I love killing them.
Well, I am old enough to remember not the 9 o'clock news, but I don't remember that sketch. Has anybody got any questions?
So that was really well presented, because normally if it comes to numbers I get lost in anything to do with it. That's why Lincoln's here, because I'm more the words person and Lincoln's the numbers, so when it gets like a lot of numbers and numbers speak, I get a bit lost. But that was really good. So do you want to ask this? Hang on a second, I've got a question from Lincoln.
You can ask it yourself if you want. Hello.
Only question I had, Jeremy, was how did you calculate that 80 million that's paid back from the 15 million loans? Where does all that extra revenue come from?
Not to be evasive, but it's a very complicated question. The public sector has a calculation based on the sectors that we lend to, the jobs we create, the stage of the business and its geography. And it's all done through LEPs, CBI, DTI, and very clever and well-established government bodies. But they have an assessment based on capital gaps and the impact of them. So the impact is that if you work in the public sector, they have these things called outputs, and they're like your measurables. So in commercial world, we measure by profit. And did you make any profit on that and loss? In the public sector, they work on outputs. And one of our outputs is job creation. Now, when we take our 6 months after every lend, I go and see these businesses and say, you thought that money would create 2 part-time jobs. What did it actually create? Often it creates more. They say, well, actually, we did a job share and we took on 8 people. And we've taken on 1 full-time accounts officer. So often it's more, but they measure these outputs in terms of the age of the employee, the background of the employee, the sexual orientation, the ethnicity of that, to really demonstrate that we're not just lending to, you know, white middle-class factory owners who only employ blah, blah, blah. So there's a lot of analysis goes on behind the scenes of this. And this is very the public sector world, which isn't really my world. But there is a deep complicated calculation that takes place that produces the fact that CDFI's impact has been measured over 35 years to vary between about £4.4 to about 5.2 times the impact of the capital. So I've got no more clever answer than that, really, other than
cool.
it's spin-off. It's more than just the money.
Yeah.
And if you remember, I said that if I lend £1 million this year, those customers will pay me £1 million back over, say, 5 years with interest that will cover our running costs. But what happens to the $1 million that comes back? Well, we lend it out a second time for another 5 years. And then what happens at the end of that? We might only get 900,000 back. Well, we'll lend that out a third time and a fourth time. So actually, each pound isn't just a pound, is it? It's recycled and becomes 3, 4, 5. So again, if you think about it, it's endless. The impact is endless, and that multiplies up, and that's how it's produced. So yeah,
Clever, isn't it? Really.
Awesome. Thank you, Jeremy.
Yeah. And I know that there's funding available, you know, if you know where to look for it, kind of thing, just as there was with COVID, if you knew where to look for it. But I just didn't realize that there was so much of it, you know, through yourself, obviously, until I started talking to you.
So the bigger answer to this is there's a thing called, I use the word responsible finance, which just sounds lovely and sweet, doesn't it? But it's actually an organization called Responsible Finance. And if you click on their website, there's a thing called Finance Finder, and it's got a target with an arrow, and it's all green and yellow. And Theodora Hadj-Michael really heads up the sort of 48 CDFIs that are left in this country. There were originally about 62, I think, set up in 1984 under John Major, but because they've been run by people without lending experience, their money's often been lent out badly, unsecured, and it never came back. So that money's been lost. But there are basically about 32 CDFIs left in the country, and there are some gaps. So if there's a gap, I will go into them. But for instance, if I get an inquiry from Plymouth, I'll say, oh, I'll find you the CDFI in Plymouth to deal with that. Because we are given the Northern Powerhouse Investment Fund because we're in the north. There is another one called the Midlands Engine Investment Fund, and that runs across the Midlands, and I know the deliverers of that. Doesn't stop me getting inquiries from Coventry and Staffordshire like yesterday, but it means I'll signpost them then to another responsible finance provider. And when you click on that Finding Finance website under responsible finance, you actually answer 3 questions. Is it a personal loan or a business loan? What's the amount you want, and what is your postcode? And it then comes up with 5 responsible finance providers in your region. And some of those are CDFIs, some of those might be people who have taken on a government contract to deliver them nationally. But it does show there is a network of responsible finance providers out there, albeit they're not names that everybody's heard of. So signposting people to those is another great solution, you know. Yeah,
no, that's really interesting. So, you know, obviously inside of our group, we've got lots of entrepreneurial people who quite often don't just have one business, they've got fingers in a few pies. So what would actually be, I'm trying to think of questions that they might ask. when you talk about a startup loan.
I'll just cover the startup loans again because it's worthwhile. It's the best kept secret.
Well,
not a secret. Not a secret. It's just I'll tell you why. I'll tell you why they're not sexy, and then that'll explain why. Nobody makes any money out of it. So people who are driven by money don't bother telling anybody about them. It pulled my hair out. Accountants and commercial finance brokers, right? Sorry, I love you all. You're all great, but you're there to make money. So why would they ever refer a customer to a startup loan? Because there's no commission. Now, that's not the answer, but that's what happens.
Yeah.
So I come across businesses all the time that have a 12% unsecured loan. They've got a 6% cash flow loan here. They've got an asset finance loan there. And I say, why did you not take out a startup loan? Nobody ever told me anything about it. Okay, well, who sold you the unsecured loan? Who sold you the asset finance loan? Because somebody's made some money out of that.
Yeah.
Commission, 2% commission or whatever it is. And that person either is ignorant or maliciously didn't tell you about it. And that upsets me greatly. So when I was sat in the eSpark, which was like the NatWest Accelerator, I would be pointing people to startup loans all the time. 6% no arrangement fee, 6% no arrangement fee, 6% no arrangement fee. You pay me nothing. Even if I do all the work and agree it for you, you pay us nothing. We get paid by the government for every case we draw down, and we do 200 of them a year. But 6%, I mean, wow, it's flat, no early redemption fees. And it's 25 grand per owner. So if you're a business, you've set up husband and wife, 2 partners, 2 directors, you can have one each. That's 50 grand at 6%.
Wow.
If four of you get together and you create 25% directors, you can all get 25 grand at 6%.
And what are the stipulations for a startup, new business? So I'm just thinking, as I say, because we've got a few people that do different things, could it be that they've got an existing company, but they want to set up a new arm of that company?
Yeah. So that's the common thing. Startup loans were always for businesses up to 2 years old. And last year, after about 20 years, they reviewed it and increased it to 3 years. So we often have to remind businesses that I know you don't think you're a startup anymore, but because your bank account revenue has not had 36 months worth of revenue, you are technically a startup loan. Startup, and you are eligible for this scheme, so don't ignore it. But once you've had it, you can't have it again. Now, if you're a serial entrepreneur and you set up a greengrocers 10 years ago and just borrowed 10,000 under the startup loan, guess what? You can come back now and apply under a different business for the other 15 that you, the individual, didn't get, because in effect it's a personal loan from the government to you, which you put into the business. And it's a personal loan to your partner, and it's a personal loan to you. It's technically a personal loan from the government, UK Treasury, to you, the individual. And that's why it checks your eligibility through your national insurance number, your UK citizen status. The people that get declined are people who don't have that domiciliary UK base. So yes, it is there, and yes, you can use it as up to the 25 grand maximum for other businesses. Yeah.
Because I'm sure there'll be lots of people, well, maybe not, but I'm just sort of thinking from the entrepreneurial side of things. I mean, Perrin, you've got the photography side of things, but you might decide that you want to move into the videography side of things, and it could be set up as a separate company. And that would possibly be something that you could do. I don't know. I'm just thinking out loud, really.
No, that's very good. No, I like that. I didn't know that would be possible to do that.
I didn't either.
With my old bank manager's hat on, I would say we used to get a lot of businesses that would trade up to sort of 82,000, the VAT threshold, where you then have to go VAT registered. And what they would do is set up a second business and say, well, all the goods go through this part of the business and all the services go through that. So I've got 2 businesses turning over 85,000.
Oh,
and
nice.
I still don't have to register for VAT.
That's interesting. I've not heard that one before.
It gets to a point where some people say, I need to register for VAT because it's now part of my life and the products and services I buy and sell are, so you can't avoid it. But for small traders who don't want to be VAT registered and they've grown it to that threshold, they often create a second entity and do that. So again, yes, that would be a separate business, and therefore, but again, remember, it's a personal loan, so it's you, the individual, It's assessed on the business, so you could have a second business plan. But as far as you, the individual, if you've not borrowed your 25,000 max, then you're eligible under the scheme to do it. And that's really why our enterprise loans really start at 25,000, because below that we point them to the best, cheapest scheme there is. Because our loans, remember, are unsecured, so you're going to be borrowing around about 13-14%. For an unsecured loan. It's still cheaper than a credit card, still cheaper than an overdraft, a bank overdraft, but it's more expensive than 6%. So, use the cheapest first and then move up through the gears.
And what happens if somebody, again, just thinking of something from what you've just said, it's just made me think, what happens if a business has been purchasing on a credit card because that's the only way they could get finance, maybe?
That affects their credit.
Could they then get the loan to pay off the credit card?
Yeah, and you could do that, and shifting debt from one to another, people know from their personal lives, makes common sense. From a business point of view, it's freeing up the capital, because with cash in your business, it's really important that people don't restrict that. And they a common issue in business is that they lack working capital, because they do business with people who then take them for a ride and don't pay them for 40 days, 50 days, 60 days, when they've still got wages, weekly wages, monthly rent. Most small business owners, and again, this isn't a criticism, but they tend to start off running business like they do their own personal finances. They pay everybody on time, but they don't get paid on time. Classic working capital restrictive. So they tend to borrow on short term. And if you're in retail hospitality and you've got a card machine, there's loads of merchant services that will lend you short-term money, 14 days, 30 days, cap on tap. It's expensive, but it's short-term borrowing. And a lot of people have those, and they just repeatedly borrow month after month after month after month. And when you look back at what the cost of that borrowing is, it's disproportionately high, and they would have been better taking out a commercial loan at commercial loan rates to do that. So yes, moving down to the shortest is a good idea. In terms of the startup loan assessment, it's a government scheme, so they assess it based on what they're looking for, really, is growth. Go back to those numbers I said before. They're not looking to just fund ongoing costs for a business just to plod along. They're looking for it to grow, because it's that growth that generates more tax revenue, more PAYE, more VAT, and contributes to the economy.
Can I ask a question, Jeremy? Is there a limit on the amount of turnover, money-wise, that you can be eligible? So, for example, I have a client, and I think they're just literally within that 3-year limit of being a startup. But I think their turnover is about 7 million. And they're looking to then develop in a slightly different sector. Well, it's in the same sector as in education, but it's in the private sector. So if I'm not aware that they wanted a loan, but if they wanted to take this community development funding loan out, would they be, obviously, if they met all the other criteria you talked about, would they be eligible, or would you see them as being, well, no, you've already got a £7 million turnover, so as far as the return that you're talking about, as far as employing lots of employees, because that's what they would be doing as they would grow that business. So it would come back, obviously, to the Treasury eventually through taxes. But I just wanted to know, is there a limit the type of businesses you loan to, if you see what I mean?
Great question. No.
That's interesting.
Because if you think about it, the reason why people get declined by banks is a sector policy, i.e. we don't lend to businesses that small, that big, that old, in pubs, in these sectors, in these geography, whatever those policies are. And trust me, I've worked in and around those policies for years, and the blue bank and the green bank and the yellow bank all have very similar policies, and they tweak them up and tweak them down. Then we're by definition lending against those policies, aren't we? So if somebody comes to me and says, I'm running a successful pub, you've got to book a week in advance to sit there. I've got heavy drinkers 4 nights a week. I've got a darts team, football team, successful pub, but the bank won't lend to me because I'm in the red sector. Then I'll say, okay, I'm looking at it as an underlying business. I'm not bothered what sector it is. as long as it's legal. I mean, you know, I've had a couple of, you know, things that you might know.
Yeah, I'm sure you get a few dodgy
and it's
people
like, hang
coming
on
in
a minute,
asking for money.
I don't think
Yeah.
reputation risk here is up for grabs.
No.
But what I'm saying is, we don't have those sectors by definition. Now, turnover is a really interesting point, because in my day, I had 4 portfolios of 250 customers as a business bank manager, and I would see those customers at least once or twice a year. Everything from your corner fish and chip shop to heavy manufacturing. Okay, everything turnover from startup, who I might have opened their account and they might be turning over 50 grand a year, right up to 10 million. Okay, the banks have sectorized those and now don't have any face-to-face banking unless you are turning over probably 5 to 7 million and upwards. So any business that does not turn over 5 to 7 million, you do not have a face-to-face business relationship manager. Unless you have secured borrowing, i.e. you've bought the mill or the building or whatever, over about 150 to 200,000. What you have is you have an 0800, it's what, sorry?
Do you think that's a sad thing that face-to-face contact has gone? Because presumably
Completely.
the actual business owners must have got massive value of being able to have a face-to-face with the bank manager.
Completely, but we've tried this for years in banks, and people want face-to-face, but they're not prepared to pay a fee for it. So we used to have 4 models of 5, 10 or 20 or 50 quid a month, and people didn't want to pay for it. But when they have a problem or when they want to discuss, they do want to see the bank manager. So yes, people do want relationship banking, but banks were under a lot of pressure then not to provide smaller facilities. And it's partly through regulation and bank bashing that went on a decade ago to say, right, stop providing small unsecured overdraft facilities, which the banks then have had to do. They've had to withdraw all that, which isn't a good thing. And that's your little regular businesses and your hospitality and your high street shops. So unfortunately, all the banks have moved to a model whereby they've got a call center, they've got a team of people, they say are business relationship managers, but you get a different one every time you ring in, and tomorrow you ring in and you'll be speaking to Shirley or Kevin or, you know, Tracy, and there's no connection to yesterday's conversation.
You have to tell the story all over again and waste that time doing that.
Yeah. Yeah. Whereas when I took over a portfolio, you know, in my day, and I'm talking, you know, 2000 to 2014, you know, people would say, oh, you're the new guy, and how long will you be here for? And I'd say, well, you know, challenge me on that. But next year, I'm reading the notes of my predecessor, and I understand that last year you remortgaged and you did this, and I know that your wife's called this, and your son's joining, you know, and you would have a relationship dialogue.
Continuity,
yes, very sad that that's all gone, but it's long gone. It's long gone.
Yeah.
And my customers say to me regularly, you're just like an old bank manager. And I say, I am an old bank manager. Yeah. And they say, can I talk to you about other things? And I say, do you know what? At Financial Enterprise, all we do is term loans. We don't do anything else. We don't sell life insurance, mortgages, overdrafts. We just do that. But of course you can, because my network is broad and I can help you with anything. Anything I can help you with, I'm happy to. So I enjoy having a relationship with my clients because you can sense that they want that. And I'm very, very lucky, just to indulge for a moment. It's only afterwards that you appreciate my job going out and meeting businesses every day. I'm very lucky. And one of the things I realized was that business owners feel isolated. And that you coming is an opportunity for them to say, I'm using this system. Is everybody using this system? Or I found out about this £500 you can get for a new computer. Is everybody doing that? Because they feel that they're missing out on something. And what they want to be is they want to be in that lifeboat with 10 other people the same as them. And it's called Feel, Felt, Found. And it's a sales technique, but it's about saying, do you understand that you're not the only person on your own? Here's some other people. This is what they're feeling. And what they've found or what they've used is X, Y, Z. Might that be helpful? And it's the way that people often buy collectively. And you do it every day with your friends. You find, are you on Facebook? Do you? Oh, great. Have you been to that restaurant? Is it nice? Oh, great. I'll go then. And we buy collectively because we're human beings. We're social animals. But when we're ploughing our own, day to day, especially with COVID, sat at your desk on your own, and you've not seen another human being for 8 hours, you just crave going out there, don't you? And so relationship and trusted advisors, that's what we want. Yeah. One
other question I've got as well is, if people are going to apply for this loan, do they have to have been rejected by other banks, etc., or can they just think, oh, well, actually, this is a great interest rate, I think I'll just go directly to this source?
Yeah, no, we don't need a letter of decline, but what we take is a declaration to say that somebody has declined to assist, and by that we mean nobody answered the phone at the bank. That's number one.
Oh, really?
Can't
Okay,
get
well,
hold of anybody.
Probably.
Number two is the banks, get this, they're all accredited for the recovery loan scheme, but none of them will use it because governments have not always paid out under their promises. I hope that's not a big news scoop to you, but so they don't trust the recovery loan guarantee, that if a loan defaults, they can go to the government and say, hello, under the recovery loan, please can I have 70% of that debt? Governments find ways of squirming out of their responsibilities, and banks have a long history of being hurt by that. So they don't trust the recovery loan scheme, so they pay lip service to it. They'll never say that publicly, but that's number one. So if you see the recovery loan and think, oh, I'll go down to my bank, hello, I'd like a recovery loan, they'll sort of find a reason to say we're not sort of doing those in a polite manner.
Oh,
whereas we're almost sort of a public sector organisation. We're non-profit, we're a social enterprise, we're accredited by British government and Treasury departments. So we kind of have to trust that guarantee. So we do lend under that guarantee, and that hopefully stops our defaults.
You must love what you do, Jeremy. What a lovely sort of career journey that you've been on, and to be able to now use all of that experience that you had as a bank manager. But actually, this is probably even more enjoyable because you're giving back also so much to society,
helping so many people along the way.
So many people, exactly.
Now, exactly. Well, thank you, because yes, in a indulgent manner, I do, and I sleep very, very well, and that's why I love doing what we do, because we produce these every year. The problem I've got is that we're quite a small organisation. We don't shout about it enough. No. We do have some champions, and we do have an industry, if you like, and as I say, Theodora Hadge-Michael, champions us, and the British Business Bank do. Only on Tuesday, I was giving a talk at the NPIF Roadshow. They've done 3 to try and get the message out. The point was, the room had about 40 people in it. 20 people are already part of the infrastructure. The other 10 probably already know about it. Yeah, that room could have been full of 200 local businesses who had never heard of this, might have got some benefit. So yeah, it's just about getting the word out. You can only build Rome one day at a time, can't you? Yeah,
and on that note, I'm just wondering whether this would actually be a good video or recording to share actually onto LinkedIn as a way to try and attract people to the hub, but also giving them some value. Yeah, because it is a really good, well, it's like a best kept secret, isn't it? It is a best kept secret. It's bonkers.
Absolutely. Well,
I mean, do you do sessions on the FSB and stuff like that? Because there'll be people on there that as well. Where do you network?
Everywhere.
Well, yeah. I mean, if I blow my own trumpet, I'm quite well known across West Yorkshire, and I have been asked to give talks on what I call the funding landscape, and that is something that we've done. But because of COVID, a lot of that has changed. It needs to be constantly aired, so that as new entrepreneurs emerge, as new people move into the world of self-employment for the first time, it's an unnavigable landscape, and we've said this a number of times. It's very hard to map. So what we need is good people, and I believe I've got a good network. So I think I do know good people in public sector roles, LEP roles, chambers roles, FSBs, but it is having those opportunities to sort of talk to the audience that is interested to hear that. Otherwise, it's a boring talk about loans, isn't it? Like you say, if you don't need a loan, you don't borrow for fun, but it's when it unlocks the potential.
We know lots of people that might know, don't we, Rachel, in our network? So, and I do think it's a best kept secret.
And I'm thinking that there might be a lot of people out there who think, well, I won't ever get a loan, so I'll just carry on doing what I'm doing, and they probably can never expand because they just don't have that extra little bit of money to do a bit of PR or to do a bit of advertising, or to just let them grow a little bit, or even to just get a VA to do some work for them,
Yeah.
because they don't have that extra funding. And so I was just thinking, they're maybe the kind of people that could, well, benefit from this, because actually if they could get a little bit of a loan, it might just take a bit of pressure off some of the everyday stuff that they're having to do that really they don't need to do.
Yeah, absolutely. I mean, we've had people like plumbers come to us and say, look, people want my boilers, but a boiler costs £2,000. If I could sell them finance, could I have a loan so that it pays for, and that's often been a way that people who have a capital barrier to providing their services try and either finance it themselves or signpost them to us.
Yeah.
Obviously, we don't do boiler loans because they're personal loans.
No, but I've done. I've come across social media trainers who have, a £10,000 program, and obviously most people don't just have £10,000 that they can hand to them, so they'll do it over a year or over 6 months or whatever, and they finance it. So again, that's another thing that smaller businesses probably wouldn't even think or know how to get hold of that.
And again, that's down to terms, isn't it? So that provider is saying, well, I'm prepared to accept, £1,500 a month and have a relationship with you over a year, but they're giving away credit. Do they understand what they're doing? Or also, if it's that party is saying it needs to be paid up front, do they know how to access it? And sometimes grant for training is a way that I've seen providers show people how to access a grant for training and development. The skills training emphasis is now taking place with Adventure, changing the skills gap. That'll be a big issue. But again, those people are really my network. So if somebody comes to me and wants £50,000 and I know that 5,000 of that request is grantable, I know who to go to in the grant department and say, hey, can they get this? Could they access that? And I only need to lend them 45. Yeah. That's cheaper for them. And it's networking together like that. Banks will lend up to sort of 65-70% of security. So if you wanted to buy the freehold of your business and it was £100,000, a bank would lend maximum, 65-70,000. But I could come along and do the other 25-35,000 to make that deal work, if you know what I mean. So I call that a blended solution, which is, you'll get your 65 grand at 3 over base, and you'll get 35 from me, expensive, 13-14%, but it gets you the property and then turns your rent into a mortgage as opposed to but what I'm saying is by working together with other lenders, working together with other professionals, working together with other people in your network, you can often get the best solution for people. And that's what kind of floats my boat, that, we're doing the right thing and we're helping and signposting people. So I spend a lot of my time in my network, with my network, because it's important to me.
No, that's really interesting. Really interesting.
Jeremy, when we have a new client come to us, we always ask them if they are under 3 years old, because we know if they are, then they can approach Adventure, and Adventure will give them money towards a shoot and towards their website. I think it's about 50% still, isn't it? They give them 50%. So we always say, head to Adventure and see if they can help you. I think Adventure's maybe coming to a close soon. So there's kind of two things there, really. One is sometimes those conversations lead on into areas that is possibly your area. So if you're able to send me anything over, then we can keep that and pass all your details on, if that's okay. And the other thing is do you know of anywhere else that does support new businesses in this way, giving them more, not so much a loan, but more of a funding towards it?
Okay, so Adventure is a perfect example of an ERDF funded program. And that program is coming to an end because we left Brexit 3 years ago. And the money for those programs that's been extended every 2 years has now come to an end. When I mentioned the skills gap, that's because my good friend Alan, who is one of the Adventure managers, has just announced on LinkedIn yesterday that he's taking this new job. And that's because all the Adventure managers will come to a close. Tim Gillies yesterday, Alan yesterday, and all of them. Now, the 10 odd venture managers, they're all my friends. They're the kind of people that say, I'm working with a business at the minute. I've given them 12 hours with a business plan. I've done some financials. We've got them this grant, but now they need 10,000. Can you come in? And that's exactly my network. So yes. And whilst those good people and that who work in those sectors, who have good knowledge and good support, that support will look differently going forward across all the regions, whether it's Leeds City region, which is West Yorkshire, basically under a different name, whether it'll be under the skills gap, whether it'll be the separate grants, because they come together in a bit of a jigsaw way, and it's not very clear. You're absolutely right. There's always a need for business support, and the end of those ERDF funded programs is a sad end of a good long run that I've known about for nearly a decade. But certainly that business support should and could and will still exist in some shape or form. We'll have to wait and see what the LEPs and what the chambers sort of come up with. But yes, more than happy to talk through cases like that. They're the sort of typical businesses that feed into our startup loans, and that's why we do work with those organisations so well.
Thank you.
Do you do podcasts with anybody? Interviews?
The most weird one I did was an American ex-WWF, like a cage fighter. He'd made loads of money, had retired, and now had entered the world of philanthropy and business funding, and interviewed me, must be 2 years ago, and found out what a CDFI is. The funny thing is, CDFIs are 10 years ahead of us in America. They are everywhere. When I went on holiday to San Francisco the month before we went into lockdown, I was in San Francisco on my own, let's just say that, and I looked up 3 CDFIs and actually went and met them just because I can. And I have dialogue with American CDFI landscape because there's about 250 of them over there, because they lend to really poor neighborhoods. They lend on mortgages, they lend small business loans, they do personal loans, they do all sorts. They're much more fragmented, much more of a need. So funnily enough, I have done a few podcasts. FSB, I've done one, Institute of Directors, but these are sort of really when COVID first hit, and we were talking about emergency funding.
I was just thinking that there's a lot of businesses who are using sort of podcast interviews to get out to their business, but get their business out to their audience, but also to your audience. And I was just wondering if you wanted some introductions. That was all.
Yep, absolutely. Please. Yep. More than happy. It's like spreading the good word.
Yeah, it is, exactly.
I'm really happy to talk to anybody and everybody, because if there's one person in the audience, I gave a talk in Bradford once, and I was quite polished at the time. I was quite used to doing these talks, but it was a very wide room, not a very deep room. And what I know instinctively when I'm talking on a stage is the people in the front row are all accountants, bankers, brokers, public sector people that know me. It's the ones in the back corner hiding behind the upright, the one who isn't confident enough to take a seat because he thinks that the room's full of experts and he doesn't know much, the one loitering by the coffee machine. And these are the people that come up to me afterwards and just grab hold of my shirt and just say, could I have a word? Because I'm like that Kevin you were talking about. I'm like that Julie you were talking about. Would you lend to me? And that is worth 10.
Yeah.
And it's that. So whoever I'm talking to, if it's reaching an audience, if it's reaching somebody that needs and wants to hear, then that makes the whole thing worthwhile. So yes, my time's your time.
Brilliant.
I can help with that too.
Any other questions? I can't believe it's 12 o'clock already.
No, I really enjoyed that. It was really interesting and fascinating, the return, to think that you lend 15 million and you actually then create 80 million pounds worth of revenue for the UK. That's incredible.
Thank you. Wow, you've taken that stat home now. Work really here is done. Thank you very much indeed. Thank you.
I've got one more question actually, Jeremy, just one more. So you cover the north, so where does the border sort of go from as far as where does it start, sort of from the Midlands up north, if you see what I mean? So
Helen's in the Midlands, aren't you?
Pardon?
I love
Where are you?
Helen's questions because they're set up for me to just knock them down. We technically don't have any barriers because we have a number of different funds. Each of those funds have different criteria. One of them was the Northern Powerhouse Investment Fund, so we can only do that in the north. But because we have other funds available to us, we can basically lend anywhere in England. So right now I'm dealing with somebody in Cornwall, two in Cornwall actually, I don't know why. I've just lent to a business in Hampshire, and then most of the time you'll see me talking about cases in Huddersfield, Halifax, Leeds, Hull, Grimsby, Newcastle, because that's sort of our middle ground. I'll use those for our case studies so that I'm not going out to, the Isle of Wight and, Cardiff and this sort of thing. But essentially we can lend anywhere in England.
Wow. Okay. I mean, I knew you did it everywhere in England. When you were talking about the Northern Enterprise, I was just wondering where that barrier started.
So technically that's sort of Sheffield or Sheffield thereabouts.
Yeah.
North, right up to the Scottish border, full east and full west. Below that, the British Business Bank pumped a load of money in, and it's called the Midlands Engine, and that pretty much runs across the middle. And then there's a third one they did, sort of Bristol way, but the geography is complicated. And up in Newcastle, there's a very old fund called a Jeremy Fund, Jeremie. It's before we joined the European Union, and it's circled around Newcastle centre. It's about an 8 mile radius centre that you can't lend in. But these are public sector Quango type places in the past. So essentially I can lend anywhere in England, and even if I couldn't, I know the other responsible finance provider to introduce you to. And that's my point. I'm well connected and I'm happy to signpost to other good people.
Brilliant.
That's great. Thank you so much. I understood all of that.
You're a dream audience. Thank you so much.
Perfect. No, it was really, really interesting. And it's definitely something that we can talk about. And I'll have a word with some of my contacts that have podcasts and magazines and things, and see if they'll come and have a chat with you.
Brilliant. Well, if I provide Rachel my LinkedIn contact details, probably best. My phone number's on there, my email's on there. You're welcome to contact me at any time. Always happy, but do connect in with me because it's being part of that connected community that I think it gives the most benefit. Yeah,
fabulous. Well, thank you so much for your time. It has been really, really interesting. I knew it would be, and I knew it would be something that would benefit the hub. It's just sometimes when you say who's coming to talk about finance, people might not know that they need it or that they're actually eligible for it. So well done to you two for coming.
No, I really enjoyed it. It was worthwhile.
3 including Lincoln.
Hey.
Oh yes, Lincoln.
Okay, lovely. Well, have a good day, and I'll speak to you soon.
Great.
Thank you.
Thanks.
Bye,
Bye now.
everybody.
Bye.
Cheers.
Right.
Oh, thank you for that. That was great. That was brilliant.
Thank you. You've just facilitated that really well.